Welcome to this comprehensive deep dive into MSTY, the YieldMax Mr. Option Income Strategy ETF. Over the next 5 hours, we'll explore what MSTY is, how it works, why it has avoided a reverse split, and whether investors should be concerned about holding this fund. This video is designed for serious investors and curious minds who want to understand MSTY at a granular level. By the end, you'll know the strategy, the risks, and the potential rewards. We'll start with the basics, the fund itself, how it operates, and why it exists. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. MSTY is a niche ETF focused on income generation, but it's not a traditional dividend fund. Its official name is the YieldMax Mr. Option Income Strategy ETF. The fund's primary goal is to generate current income by using a combination of MicroStrategy stock exposure and option strategies. At its core, MSTY employs what's called a synthetic covered call strategy. If you're not familiar, a covered call is when an investor owns the underlying stock and sells call options on it. MSTY takes this a step further by using synthetic positions and flex options to achieve similar outcomes, earning premiums while limiting upside participation. This strategy allows MSTY to offer potentially high distributions. But it also introduces risks, particularly if MicroStrategy shares drop or if option premiums shrink. So why would investors consider this fund in the first place? Let's explore its purpose. MSTY is designed for investors seeking high current income. Its secondary goal is to provide limited exposure to MicroStrategy's price movements. Essentially, the fund prioritizes income over long-term capital growth. Income comes from option premiums collected through its covered call strategy. The trade-off? If MicroStrategy shares rise sharply, MSTY only captures part of that gain. Meanwhile, if MicroStrategy falls, MSTY is fully exposed. One important note, a significant portion of MSTY's distributions may be a return of capital. That means part of what investors receive isn't income generated by the fund, but rather a return of their own invested capital, which slowly reduces the fund's net asset value. Next, we'll examine MSTY's performance in detail and what these distributions mean for investors. Let's look at MSTY's performance. The fund launched recently, so its historical data is limited, but we can identify key trends. NAV has experienced volatility, reflecting MicroStrategy's own swings and the effects of the covered call strategy. Key risks include single issuer risk, heavy exposure to MicroStrategy. Downside risk, if MicroStrategy shares fall, MSTY loses value. Limited upside, covered calls cap gains. Derivatives and counterparty risks, MSTY uses complex option strategies, which carry liquidity and counterparty exposure. High portfolio turnover and expenses, nearly 1% annually, which can erode returns. Return of capital distributions, while attractive for income, this reduces NAV over time. Additionally, MSTY's reliance on MicroStrategy means that Bitcoin exposure indirectly affects the ETF. Large swings in Bitcoin can create volatility in MicroStrategy shares, which translates directly into MSTY's NAV fluctuations. Now that we understand the structure and risks, let's talk about one of the biggest investor concerns: reverse splits. A reverse split is a corporate action that reduces the number of shares outstanding while increasing the share price proportionally. ETFs sometimes do this to avoid very low trading prices, which can reduce liquidity or risk delisting. Some investors have wondered why MSTY has avoided a reverse split despite a falling share price. Officially, YieldMax hasn't announced a split, possibly because the fund's NAV is still above minimum thresholds, or management believes a split isn't necessary yet. It's important to note, avoiding a reverse split does not mean MSTY is failing. Reverse splits are often cosmetic, they do not change the underlying value of your investment. What matters more is NAV and the sustainability of distributions. Let's examine the potential implications if a reverse split were to occur. If MSTY did perform a reverse split, the immediate effect would be a higher share price and fewer outstanding shares. For example, a 1-for-5 split would quintuple the price per share but divide the total shares by 5. The long-term NAV would remain unchanged. However, investor perception can be affected. Some may view it as a warning sign that the fund's price has declined significantly, while others may see it as a way to maintain listing standards. Importantly, a reverse split doesn't prevent NAV decay caused by return of capital distributions. Investors should not assume a reverse split makes the fund safer, it simply changes the nominal share price. Let's explore 3 possible scenarios for MSTY investors. Bull case: high volatility and strong option premiums sustain distributions. NAV remains relatively stable. Investors continue to receive attractive income. Base case: moderate volatility maintains some distributions. NAV erodes slowly over time due to return of capital. No reverse split is needed yet. Bear case: MicroStrategy declines sharply, covered call premiums shrink, and NAV deteriorates. A reverse split may become likely, but distributions may no longer be sustainable. Who should consider MSTY? This fund suits income-seeking investors comfortable with high risk. Those willing to tolerate NAV volatility. Investors who understand covered call strategies. MSTY is not suitable for conservative investors focused on growth. Those unwilling to accept return of capital distributions. Investors who are not familiar with options and derivatives. The financial landscape is shifting, and MSTY investors must pay keen attention to various indicators like the trends in NAV compared to distribution rates as they navigate their strategies. Consideration of MicroStrategy's price volatility is essential for making informed investment decisions. In addition, investors should closely monitor Bitcoin market movements, which hold potential influence over MSTY's performance. Furthermore, YieldMax announcements regarding potential splits can generate significant interest and impact the overall liquidity of MSTY shares and options in this rapidly evolving market. To summarize, MSTY is a high-risk, high-income ETF that uses a covered call strategy on MicroStrategy shares. It avoids reverse splits for now, but investors should monitor NAV and distributions closely. While reverse splits can be a concern, they are often more cosmetic than structural. The real risk comes from NAV erosion and market volatility. For the right investor, one seeking income and willing to tolerate volatility, MSTY can be interesting. For conservative investors, the fund is likely too risky. Thank you for watching this detailed exploration of MSTY. Stay informed, track the data, and invest wisely.